This, in the end, is going to be rather forward-looking. By forward-looking, maybe a century ahead or something, because some of the proposals that I shall have sketched towards the end will certainly not take place in my lifetime, and probably not in the lifetime of anyone here, I would think, because the changes that would be required are so enormous that they are, I think, almost beyond imagination. So hopefully you won't criticise me for these proposals being impractical. I know they're impractical, but the idea of setting them out is that I think we have to start establishing the direction of travel. If we don't start trying to effectively put the euro, or take the euro out of the neoliberal agenda that has been locked into, and start to set it up in a much more, well, I'll call it Keynesian, but other perspectives, then I think there's no real chance of the euro succeeding. What I'm going to say is going to be probably divided into about 5 parts. It's based, firstly, really on the view that there are very fundamental design flaws to the Eurozone, or the Economic and Monetary Union. These design flaws have been there from the very beginning. Indeed, many of us were arguing or pointing out to these design flaws back in the mid-1990s, and were never thanked for our efforts in that direction. These design flaws were generating issues under the surface which really came to the fore when the financial crisis hit. But the financial crisis wasn't itself, or at least it had a contribution to the euro crisis, but it really also highlighted many of the faults which were already there. I would indicate that the design flaws are at a number of levels, and I'm just going to mention some because there are others, and so if I don't mention something, it doesn't mean to say I don't think that was a design flaw. I think, firstly, that it did not recognise that there were large current account imbalances at the formation of the euro between countries. As it's turned out, those current account imbalances have tended to get wider, this until the last 2 or 3 years, when the results of the crisis have been to reduce imports into a number of countries and to some extent reduce their current account imbalances. Also, not to take into account that when there are current account imbalances, there will be capital flows between countries, and not take into account the extent to which there would be capital flows from surplus countries, typically Northern European, to Southern European countries, and the issues which that raised in terms of the debt obligations in a number of countries. It really, whilst it paid some attention to a convergence of inflation, it never paid any attention to whether there were what I would call a convergence of inflationary conditions. It is one thing to get the rate of inflation to be pretty much the same at the time of the formation of the euro, but it actually requires something rather more longer term than that. And perhaps people were not to know that one of the major problems with getting the convergence of inflation would be the desire of Germany to screw down wages in order to reduce particularly labour costs there and to increase competitiveness there. I think perhaps more seriously, there were large institutional differences between countries, which is to state the obvious, all sorts of differences in political background, economic thinking background and so forth, and there never seemed to be really much realisation of what this would do for the conduct of policies. The most sort of obvious ones were that, well, as I mentioned, there were differences in inflationary conditions. Well, at least you can do 2 things there. One is to say, well, inflation will converge because the markets work in this way. Countries will realise that they have to have the same inflation rates everywhere else. This will happen. The other is actually to try and address that issue and say, well, what do we need to do to try and ensure that there is some consistency of inflationary conditions between countries? There are many other examples one could give, for example, how the housing market works and the implications which that had for the development of what turned out to be the financial crisis in a number of countries. There's a whole range of others which I could go into, but we're not going to have time. I think this now relates to the other part of the formation of the euro, which was their attempt to, in effect, impose a one-size-fits-all solution to everything, and in doing so, by imposing the same sort of conditions, or same sort of policies, to not be able to, in any sense, take into account differences between countries. I would mention two particular ones. One was the way in which the Stability and Growth Pact operated, which was through seeking to impose uniform deficit requirements across countries, without any thought that different countries have different conditions. They have different current account positions, they have different investment levels, they have different savings levels, and all of that means that they will have different budget deficit requirements. Some will be able to run surpluses, others will not. And so these need to take into account the individual conditions. The second one, which was probably quite well talked about at the time, which is the one-size-fits-all problem arising from the implementation of monetary policy, which is a single interest rate being set across countries. And many of us pointed to the difficulties of trying to set a single interest rate which will satisfy the requirements of all. I think what we didn't realise is some of the other difficulties which will arise. One of which was that if you set a single interest rate, or a single interest rate is set by the ECB, then countries with high inflation will actually have low real interest rates. Countries with low inflation will have relatively high interest rates. And this then fed in, to some degree, into credit booms and so forth, which then took place. The second argument I will put is that the Fiscal Compact, or to give it now it's probably its full name, the Treaty on Stability, Governance and something else, Coordination, will make matters significantly worse. There are at least two particular aspects of the Fiscal Compact I want to focus upon. I'll call it Fiscal Compact just for shorthand. One is the well-known one of imposing a balance of the so-called structural budget position across countries, together with the excessive deficit procedures, which would mean that a country which has a debt ratio above 60% will have additional deflationary measures imposed upon it. I have all sorts of kind of partly technical objections to this. I think one should also object to it on the sense of this is now written into a treaty, it is written into many national constitutions, and since in my view the structural balance cannot actually be measured or defined, it is somewhat difficult to know how one imposes through law something which can't actually be measured or judged upon. But again, it kind of reinforces this view that it's going to be the same solution for everybody, and it's also, of course, imposing what will effectively be deflationary measures on a collective basis across Europe, which, if it ever came to pass, will involve very considerable increases in unemployment further. I suppose the way, I think was it last week, there was some relaxation in the requirements for deficit reduction placed on a number of countries, so perhaps in the end there will be some slackening off. The whole, I suppose, history of the Stability and Growth Pact is that when push comes to shove, they don't actually impose the rules. Although, clearly, since they're now written into the national constitutions, this might be more difficult, particularly given the propensity of a number of groups in Germany to take redress to the Constitutional Court. The second, and I think to some extent this kind of slipped under the radar, but I think it's in a way it's a particularly important aspect of the Fiscal Compact, which is the requirement for structural reforms. There's also partly, I think in the treaty it just talks about structural reforms. I don't think it actually defines what structural reforms are. So presumably anything which changes the structure is a structural reform. But we know in practice that this is a euphemism for deregulation, liberalisation, reduction of minimum wages, reduction of social security systems and so forth. I have a range of objections to this. I think firstly because it sort of helps to cement the view that this is a neoliberal project, because this is now imposing this particular set of policies on it. We used to talk about there being evidence-based policies. I don't know of very much evidence that structural reforms in the direction of deregulation, liberalisation and that lead to better economic performance or lead to lower unemployment. Some will say it does, some say it doesn't, and it seems to me the evidence is at best mixed, so it's not exactly evidence-based policy making. There are good arguments to say that this form of policy will actually make unemployment worse, reduce minimum wages, reduces demand, reduces employment in the economy. So there's a whole range of ways in which it could actually make things worse. I think I may skip over this particular slide, but so what I want to talk about, and I think these are actually major questions which have at some stage to be discussed. So, but my basic argument, I suppose, are that incremental adjustments, firefighting will not fix the problem because they are fundamental design flaws. We need, or I say we, because with the UK not being part of the Eurozone, perhaps, but an alternative treaty on stability is, I think, rather desperately required in terms of setting up a direction of travel. And a number of the changes which would come, I think, would point in the direction of de facto political union, or some significant elements of political union. I want to just point to three policy areas that I would want to include. How am I doing for time?
Oh, you're fine.
Oh, okay. I want to put it under three headings. There are a number of other headings that I would also include, and one relating back to the discussions this morning would relate to things like industrial policy operated at the European Union level or the Economic and Monetary Union level. So there are a number of other policy areas which would also need to be addressed. But I want to point to three particular policy areas: the one of the fiscal policy framework, secondly the monetary and financial policy framework, and thirdly policies in the direction of labour markets, institutions and their regulation. As a long-standing Keynesian, I would argue for the resetting of the objectives of fiscal policy to be employment and economic activity and not to balance budgets. When you are faced with a jobs deficit, looking at the budget deficit is, to my mind, pretty much irrelevant, so that it's a matter of setting what are the objectives of fiscal policy. Many, or a number of famous economists towards the end of the Second World War, Abba Lerner and Mikhail Koletsky, both argued that the purpose of, which influenced quite a lot of Keynesian policy after the war, that the objectives of fiscal policy should not be balanced budgets, but should be the achievement of the highest level of employment, full employment if possible, but that may be constrained in other ways, but the achievement of the highest levels of employment. This leads in the direction that there should be no one-size-fits-all budgetary rule, that the budget requirements in different countries will differ, whilst it would be great to have the imposition of a rule which said, use your fiscal policy to maximise employment. So I suppose in one sense there should be, I would argue in that direction, but in other directions I would argue that nation states at this stage should be using their own fiscal policy for their own objectives. One hopes that that will include full employment and so forth, but national budgets to secure national goals. However, overlaid on top of this is the need for the development of a EMU-level fiscal policy. Back in the days when the single currency was first being discussed, a number argued that there was the need for a European-level budget of substantial proportions. By substantial, people were talking of maybe 5% of GDP, 7% of GDP, to act in terms of some degree, or have the ability to perform a stabilising function across the union as a whole, but also to involve some degree of fiscal transfers from rich to poor. This is the usual situation in federations. United States, Canada and so forth have systems in place which involve quite significant transfers in effect from rich states, rich provinces to poor states, poor provinces. So that the development in time of a substantial EU-type budget, or EMU budget, I think is going to be required. But perhaps at this stage, more importantly, or equally importantly, is that the European Central Bank should not go wandering off in its own direction, but should provide support for national fiscal policies. Now, this would range from not carping in every monthly review, monthly bulletin, that there's a need for fiscal consolidation and labour market reforms. I must one day set a student to work to see whether they have mentioned that in every monthly bulletin or only every other monthly bulletin, but it's been a frequent theme. But also that they, in a sense, operate in the way in which national central banks typically do towards their government in terms of providing support for fiscal policies. That is, that they will, where necessary, purchase the bonds and the debts of the national governments, so that they will, in that sense, provide the full support for national fiscal policy. Now, this would be related perhaps to the second theme, that is of monetary policy, which is where the second item on my list would be to end the independence of the ECB. The ECB, of course, is politically independent but hardly ideologically independent, so that there's a need, I would say, a need to end the independence of the European Central Bank and to integrate the European Central Bank into democratic policy making. But also that there should be a shift in the objectives of the central bank from inflation targeting to financial stability. Perhaps more significantly, there is the requirement for the development of a banking union, which would not only have regulation presumably by the European Central Bank, but also a setup for the bailout where required of banks. But the development of a full banking union, no, that might come in any case, but that I think is part of the requirements. Let me just raise under labour market policies two issues. One which can be quite contentious, which is that a number of people have pointed out that there's been divergence in competitiveness between countries. Now, how much this could be blamed upon southern Mediterranean countries having high wage increases, or, as a number of my German friends argue, through the Germany holding down and constraining wage increases within Germany. But there's been a growing divergence between competitiveness of some of the northern European countries and many of the rest. Now, we know that that sort of situation is difficult to be maintained within what is effectively a fixed currency. Now, at the moment, some of the adjustment to that is taking place by wages within Greece being slashed, or wages in Portugal being slashed to adjust from that, to respond to that. But looking forward, one would argue for the need for some degree of coordination over the evolution of wages, prices and competitiveness across countries. Secondly, to put back onto the agenda what I call here a social Europe perspective on labour markets. I summarise it under the heading that ESM should mean European Social Model rather than European Stability Mechanism. I don't know what these policies would actually engage, but insofar as there's going to be a direction of travel for labour market type policies, that they should be in the more general direction of what might call some sort of European social Europe perspective on labour markets. So recognition of trade union rights, proper regulation of labour markets and so forth. So there's a whole range of policies there. But now, whether these are the sort of policies which should be developed at the EMU level rather than the EU level, how those policies will be developed, I don't know. But rather than having on the table structural reform as the kind of guiding principle for the operations of the single currency and the and the bailouts and so forth, to put on a different sort of view of the way in which labour markets should be coordinated and arranged. So my conclusion is that the EMU at the moment has a strong neoliberal basis, strengthened by recent changes, including the Fiscal Compact, and the requirement is for an economic and monetary union based on quite different principles.